co-founder and managing partner of Fundstrat, presenting to you Crypto Usefulness Growth in 2019, setting up for a strong 2020. Give it up for Thomas Slade.
Thanks, Andrew. Yeah, welcome everyone. Over the next 10, 15 minutes, I want to just give you just some thoughts about crypto and its importance and emergence as an asset class. I really liked what Chris talked about in terms of Bitcoin in 2014, because we're obviously in a terrible bear market. But the one thing you don't want to do is base your decisions and your confidence in crypto simply by what's happened in the past 12 months, because in an emerging technology, you have to think about the long-term drivers. And I think the long-term drivers for crypto is really two things. Is crypto becoming more useful? I think a lot of things are happening this year that are going to prove that it's becoming a lot more useful. And then equally important, is crypto becoming an emerging asset class? Because if it's an emerging asset class, that means you're going to see an entirely new dynamic in terms of what drives the price of Bitcoin and other crypto assets, but also the type of infrastructure development, and also what else ultimately drives the price of crypto assets. So I'm going to try to give you a little flavor of that in the next 10, 15 minutes. So let's start with 2018. I mean, 2018 was a terrible year. I think in some ways it was as bad as 2017 was good. I think in 2018 headwinds emerged. I've listed them here, but the ones that really stand out to me are, one, I think there was a lot of capital raised for projects that weren't very useful. That's really important, because if you think about what tokens are doing well today, they're the ones that are quite useful. The second is that regulatory headwinds developed, and part of that is because crypto involved a lot more people. Today there's 50 million wallets. In the last bear market and bull run, there might have only been maybe a couple million people involved. So because there's a larger number of people, regulatory scrutiny is much greater. And I think finally that some of the structure of the industry was highlighted, especially the role of the whales and the miners because of the fork wars. I think Bitcoin didn't have to end the year at 3,600. I think it really broke down from 6,000 to 3,600 because of what was happening with Bitcoin Cash. But that really destroyed investors' confidence about holding Bitcoin as a reserve currency. Now, that being said, I think 2019 is actually shaping up to be quite a good year. As I mentioned before, I think the key here is that the macro environment is actually turning quite favorable for Bitcoin. Now, macro matters because as it develops into an asset class, institutions are increasingly thematic, and so Bitcoin will be correlated to macro factors, and I think some of these macro tailwinds are developing. The second is that technicals are going to look a lot better. I'll highlight that here, but the most important is that Bitcoin may cross above its 200-day moving average sometime this year. And if it does that, it's going to turn a lot more investors bullish on crypto. And thirdly, there's a lot of things happening that's making Bitcoin really useful and crypto useful. So let's just highlight some of these really quickly. So the first macro factor is emerging market stocks. The red line here is MSCI emerging market equities, and the dark line is Bitcoin's price. As you can see, for the last 3 years, it looks like the same chart. Well, last year, emerging market equities fell 37%, which means it would have been surprising for Bitcoin to do well when emerging markets are doing badly. And the reason they're connected is a couple. One is emerging markets tend to be a risk-on market. But secondly, when emerging market stocks are doing badly, it's because emerging market economies are doing badly. So there's less money to buy Bitcoin. Well, if you may or notice, there's a huge rally, global risk-on rally happening. In EM's up over 20% since December. China's stock market is about to really validate a bull market move. That's very bullish for Bitcoin and crypto. The other macro driver is viewing Bitcoin as a currency, and that means the dollar index is correlated to Bitcoin. the light blue line on this chart is the US dollar index, but the scale is inverted. So last year, the dollar index rallied about 10%, so that means that light blue line went down. And as you can see, that actually caused Bitcoin's price to fall. Now, the dollar is no longer rallying like it was last year. Part of it was last year's rally in the dollar had to do with central banks, the Fed, raising interest rates. Well, when Fed raises interest rates, it makes the dollar more attractive, and that's why we got a dollar rally, headwind for Bitcoin. In case you haven't been following what's happening with the US central bank, the Fed is essentially done with its tightening cycle. I think the next move by the Fed ultimately is an easing cycle, which would be quite bullish for Bitcoin. And again, central banks are starting to, or when economists talk about central banks, they're talking about this thing called MMT, modern monetary theory. But the idea is that central banks and government deficits should be growing and central banks should be easing. And that's actually becoming sort of a political platform as well. So I think from a central bank perspective, easy money is very bullish for Bitcoin. So again, two things that are macro that are really favorable for Bitcoin. Now, there's a technical story developing in Bitcoin that's quite favorable too. And again, it's too early to call because as many of you know who follow technicals, you can't necessarily predict what a technical setup is going to be, but we can sort of theorize what it would look like. The dark blue line here is Bitcoin's price since 2010, and the dark red line is Bitcoin's 200-week moving average, okay? And as you can see, in bear markets, Bitcoin's price has tended to bottom around the 200-week moving average, and that 200-week moving average today is around 3,200, and that's why it looks like Bitcoin is essentially finding its bottom. So that's the 200-week average. It's essentially the 4-year average price. Now, why do technicals matter? Just want to highlight here, when Bitcoin is above its 200-day, so not the 200-week, 200-day, the average 6-month return is 200%, and it's up 80% of the days. When Bitcoin's below its 200-day moving average, it's only up 36% of the days. So you can see these technical levels really matter. And we did a little projection. We said, look, if Bitcoin's price holds at 3,500 or 4,000, let's say that's the range where it is now, it should cross above its 200 days sometime in the middle of the year. So now, that's a big if. Like Bitcoin doesn't have to hold above its 200-day, but what we're saying is if the 200 weeks support and Bitcoin holds these prices, it should cross above its 200-day sometime this year. And again, that's going to be quite bullish from a technical perspective. And that's in 2019. And finally, some things here just highlighting Bitcoin's becoming quite useful. JP Morgan launched a digital coin, as you saw recently. Facebook is potentially going to be launching some sort of digital currency. Pensions are now investing in crypto, making it an asset class. And of course, Bakkt is about to launch. And Bakkt is pretty important infrastructure piece in the US because it's connected to both Starbucks, so commercial acceptance of Bitcoin for using Starbucks, but it's also because Microsoft is a cloud partner there. So I think you're seeing things that are making Bitcoin quite useful in 2019. Now, a couple last things I want to highlight from a sort of high-level perspective. One is that I think you have to, when you look at crypto, a part of your portfolio needs to be long-term oriented, something that you're just going to hold and not trade actively. And this is one of the reasons why. If you took Bitcoin and you didn't own it for the 10 best days in any year, you would have the return of that dark blue line. So Bitcoin, dark columns. On average, Bitcoin falls 25% a year if you miss out on the 10 best days. Whereas if you look at the top 10 days for Bitcoin, your average return is in the hundreds of percent. So in other words, Bitcoin makes almost all of its returns in just a handful of days. So let's talk about the usefulness of digital assets. I'm just going to highlight a couple things here. One is, let's keep this towards a financial market perspective. And as you know, probably one of the most well-followed and most well-respected investors is Warren Buffett. I think one of the reasons he stands out is he has a long track record, over close to 70 years of investing experience, and he's one of the few investors that has become a billionaire purely by investing in the stock market. most people who become billionaires managing money manage other people's money and they get paid on it. He's actually become a self-made billionaire buying stocks. And Warren Buffett in 2014 said, Bitcoin's a mirage, stay away. Bitcoin was in the $400 level back then. Most recently, Warren Buffett again said Bitcoin's a delusion and attracts charlatans. Now, that has made a lot of the traditional investors pretty skeptical of crypto. But you have to remember, Warren Buffett doesn't get every investment theme right. I mean, for instance, in technology, in 2000, he basically said, technology, I got to read it here. He thinks it's a folly to try to buy tech because, in short, there's too much change in that industry. And 0% of his portfolio was technology in 2000. Now think about it. The biggest trade since 2000 was internet, and Warren Buffett owned 0. Today, Warren Buffett, when he talks about tech, says he regrets actually not investing in a lot of these things. In fact, when he met Amazon, he didn't invest because he thought it was too good to be true. And today, tech is 25% of his portfolio. So Warren Buffett has been known to change his mind. But when it comes to Warren Buffett's own investment strategy, I think it tells you about how you should be looking at crypto. Warren Buffett has said that if you took out the 7 best stocks he's ever owned in 70 years, his investment performance is average. So in other words, Warren Buffett's returns were purely generated by outliers. So I'm going to skip ahead and actually highlight why I think this outlier strategy is really going to matter in the next couple minutes. So one is demographics. We spend a lot of time with our clients explaining how demographics affect traditional financial markets. And this chart really highlights this. This is the 6 living generations in the US. Everything from the greatest generation all the way to Gen Z. They're separated by roughly 20 years by birth. But on the column on the right shows you the year that generation peaked. Okay? So the greatest generation, total population peaked in 1930. Silent generation peaked in 74. The boomers peaked in 99, and Gen X peaked last year. Well, take a look at this chart. The peak of every generation has coincided with the peak in the S&P 500. So it tells you generations influence not only the economy, but market outcomes. And the next generation that really matters are millennials. Now, millennials are about 26 right now. They're the next generation of sort of economic driver for the economy. But they're the most important generation because really young people are the only people that transform society or create new companies. So, you take Nike, Costco, Schwab, Apple, Google, every major story in the last 30 years, they were all founded by someone in their 30s. So just to give you an idea, in 1980, the boomers were 26 and a half years old in 1980. And if you bought a basket of 100 consumer stocks, because the boomers were much bigger than their parents were savers, so boomers spent. But if you bought a basket of 100 consumer stocks in 1980, and 93% of them went to 0, you still had a 12 times return over that 20-year period, which means you would have had returns similar to private equity or venture capital. So it shows you that that generation, the biggest trade was betting on the consumer. And of course, Gen X was 26 and a half in 1997. The biggest trade to make at that time was internet. And if you bought a basket of 100 internet stocks in 1997, 96% could go to 0, and you still had a 16x return. Again, this is kind of like crypto today. It's hard to know who the long-term winners are going to be, but the bet you want to make ultimately is this chart, that there's roughly 50 million crypto wallets. There's 5 billion Visa accounts. Crypto is a social network value-based instrument, so obviously adoption is going to rise in value. But if you have a 90x increase in crypto wallets in 20 years, you're going to have close to an 1,800 roughly x increase in the value of the crypto market. And one last thing I want to highlight is this here. that you want to really bet on things that are useful. So we're just highlighting here on this slide that when you look at tokens that have actually done fairly well, like Bitcoin, which is really turning into reserve currency actually, Ethereum, which is a stablecoin platform, XRP, which has a large community. I know it's a very controversial token. Binance, which is really quite a useful token, especially for their millions of exchange users, and even Dogecoin. These have been outperforming tokens, but they're also quite useful. So that's it as an overview, and there's a lot of other slides, but that's to give you a little flavor about what we think about crypto. Thank you.
Thank you, Tom Lee. Thank you, Tom Lee. Thank you for giving us the faith to hold on to our Bitcoins, even buy a little bit more.